This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you daily with short business episodes, short private equity episodes, as well as we try and make sure you learn a little bit of something and you're entertained too. Sometimes we succeed, sometimes we fail. Here are 5 stories we're following this morning, and thank you for listening. First, the markets are rising this morning on a variety of different factors. One factor is the potential for a soft landing, meaning we're still seeing GDP growth. Jobless claims were not nearly as bad as expected this past week, as well as China is trying to stimulate their economy. So you've got a number of different things that are leading the markets up this morning versus down. Second, the GDP, the economy grew at a rate of 3% in the second quarter. Again, as we say often, if deficit spending is at 6 to 8% of the economy, we ought to get at least 3% growth, but it's better than not having growth. It's certainly better than a recession. Third, a great article in Bloomberg about Fed Chairman Powell emerges stronger after leading Fed to the first big rate cut. Powell, to me, is one of the few down-the-middle leaders who does pretty much what he says he will do, focused on a goal, without overly pandering to either political side. He is what Treasury Secretary Janet Yellen should have been as Secretary of the Treasury. Instead, she ended up being very much a pandering politician versus hitting it down the middle and saying what she thinks. I am not one who wakes up every day as a Trump hater or has the Trump hatred syndrome, whatever. But Trump's perspective on Chairman Powell, I find to be quite wrong. This criticism is quite wrong. Those of my generation, there's a famous character, underdog, who's here to save the day. I won't try and sing it correctly, but in some ways, Powell is saving us from ourselves. Incredible amount of deficit spending that leads to inflation. He did a great job of keeping the rates high as long as he could to fight inflation, notwithstanding sort of the left being upset with him for keeping rates so high and the right saying he's cutting rates to help politically the Democrats. Either way, I think he's hit it down the middle really well, and God bless him. Fourth, Costco continues to thrive. Its stock is up 38% year to date. It's reporting earnings this week on Thursday and expected to be a good day. So that's Costco. The fifth story we're following today is Bloomberg Morningstar report that nearly half of Americans retiring at 65 risk running out of money. I think that number is vastly understated. I think a lot of people end up in serious financial trouble. There are a whole bunch of reasons for it, but we see it as really a challenging situation. Those are some of the stories we're following today. I'll just make a note on another one. One of the most recent things we saw was this concept of putting a cap on credit card interest rates that, banks couldn't charge more than 10% interest rates. And what's happened with these kinds of things is, again, there's always a number that this works at. But the reality is these types of policies that sounds good on their face end up usually hurting the poorest, the least prepared for this, because those are the people that won't be offered credit cards if you cap rates, because sort of the risk reward spectrum for the banks doesn't work at a certain lower interest rate. It's very similar. In New York City, at one point, they made it really hard to evict people. And that on its face sounds like a good idea. And again, you don't want people being evicted willy-nilly. But what it did was it forced landlords to be much more stringent in who they allowed to rent apartments. The actual consequences of it, the next level consequence of it were very bad for exactly the types of people that they were trying to protect. So fascinating situation. But that's similar to how I feel about capping interest rates at 10% for credit cards. It's not that I'm a huge fan of high users interest rates. In fact, I'm not a believer in credit card balances if it can be avoided at all. But I do think the policy ends up having consequences that actually harm the lower income consumers significantly. Thank you for listening to this version of the Becker Private Equity and Business Podcast. We'll be back at you today with a few other episodes. Thank you for listening.